They still haven't released their 2020 census because they couldn't believe what came back. China is the fastest aging society in human history. Industrial demand-driven inflation. We have to double the size of the industrial plant, preferably in the next 5 years. China will be able to displace the US Navy around the year 2450 from energy anywhere else and of any other kind. We use natural gas wherever we can. We're the only country that does. This is what we're all bitching about right now.
Today we look at part 2 of Peter Zeihan's keynote on geopolitical strategy and dealing with deglobalization. In this episode of Essential Investing, Zeihan breaks down the boomers' impact on inflation and the solution to inflation. If you want to understand whether inflation will be resolved anytime soon, or will it be a thorn in our side for many years to come, then you will need to understand the structural issues causing inflation. It is not just the out-of-control central banks and their printing presses. It goes way deeper than that. Enjoy.
Here are the big four economies. Let's start with the bottom, the Japanese and the Germans, specifically the Germans. The German industrial system was going to collapse this decade regardless because their workforce is dying out. The energy crisis simply brings the date forward to the next couple of years. Japan, world's oldest country but aging less slowly, figured out 30 years that they need to automate and to offshore. So the Japanese economy today is about the same size that it was back in 1997. It'll probably be able to hold, but you shouldn't expect miracles. Then we got China. Now you see right here are the American millennials. You see that China kind of has that one spike that looks promising. Remember, their population is roughly 4 times the size of ours, so that one spike really matters, if it exists. The Chinese have been updating their data in the last couple of years. They still haven't released their 2020 census because they couldn't believe what came back. They're now starting to believe it. And they now think that they overcounted their population by in excess of 100 million people, all of whom were born since the one-child policy was adopted 40 years ago, suggesting that those yellow bars don't exist at all. If this is true, China is the fastest aging society in human history. That means from a demographic point of view, the Chinese economic model cannot survive the decade. Okay, labor costs, here are Southeast Asian countries, which I'm broadly positive of. Decent geography, good demographies. Here are our Mexican neighbors, very competitive right in the middle, and they're the Chinese. China is no longer the low-cost producer of anything. It's only the pre-existing sunk cost of the industrial plant, which is why we build things there still. For the United States and Canada, brother countries, similar economies, inflation tracks. 3 big phases. First, that post-war industrialization and urbanization phase. We built skyscrapers, we electrified the countryside, we built interstates everywhere. Industrial demand-driven inflation. The baby boomers. Largest generation we have came of age. And then we had this glorious moment that we all think of as normal. The Chinese poured 1 billion workers onto the global labor market, pushed down the cost of manufactured goods. The Russian system imploded, and an empire's worth of raw materials was poured on international markets, keeping commodity prices under control. We have to double the size of the industrial plant, preferably in the next 5 years. We're looking at 9 to 15% inflation for a minimum of the next 5 years, just because of the macroeconomic trend that assumes that government does not screw anything up. If we fail to double the size of the industrial plant, if we fail to expand that refining footprint, that 9 to 15% is our new normal from now on, and we will have product shortages. Or we can all participate in the fastest economic growth in American history to compensate.
Zeihan goes on to talk about how each generation has affected the economy and what we can learn from it. He also unravels some of China's big lies and tells you what is really going on over there. Can we produce our way out of this mess with improved productivity, or will the dying workforce produce massive shortages? Let us know in the comments below. Hit the like, subscribe, and bell button to get immediate notification of tomorrow's video, where Red Pill economist George Gammon reveals the best asset to invest in during times of political stupidity that we are living in right now.
This is a straight-up population density map by state and province. The 2 quadrants in the west and the quadrant in the lower right, those 3 quadrants of the world are net exporters of food and energy and minerals. The remaining one, the top right, is a net importer of everything. In fact, you can narrow it down. This circle is a net importer of everything, and the rest of the world is a net exporter. The country that is most dependent on the US Navy to keep everything safe and flowing freely is China. People talk about the Chinese having a big navy, 600 ships, but only about 60 of them can sail more than 1,000 miles. In combat conditions, they can only go about 350 miles. China will be able to displace the US Navy around the year 2450. Everything that's going down in the world today from a security point of view is a direct threat to not just their potential rise, but to their very existence. There's a dozen major reasons why US shale is fundamentally different from energy anywhere else and of any other kind. But for today's discussion, this is by far the most important. We produce it where we live and no one else does. You can have a collapse of the global transport system, and we're broadly okay. You guys are primarily in the shale fields after the oil. Oil's a liquid. Oil's not going to run away from you. You can put it into a pipe, you can put it in a tanker car, you can put it in a rail car, whatever you want. But gas disperses, and so much natural gas comes up as co-production that you have to flare it until the infrastructure can catch up. That means that roughly half the natural gas that is sold into the United States system is sold in as a disposal method. And that changes the price structure, and that changes how we use it. Because when natural gas is basically a waste product, you use it for everything. Normally, you would only use natural gas to make this relatively narrow product set, butadiene, methanol. But in the United States, we've retooled everything. We use natural gas wherever we can. We're the only country that does. Now, what this means is between the increase in demand for electricity and the changes in how we do petrochemicals is we've expanded how much natural gas we use, which means that we have now changed the price structure. Storm comes through the Gulf, they shut everything down, they evacuate the rigs, storm passes, you go back out, you spend the next several months repairing the damage. Get a sustained price spike until shale came along. By 2009, we were getting half of our natural gas from shale. Every shale well is onshore. We don't care about storms in this part of the industry anymore. And so we had this long stretch of disposal prices, but demand has increased. This is what we're all bitching about right now. We have finally breached the 50-year average for natural gas prices. Here's what the Europeans and the Chinese are bitching about. This is just wobbles compared to what's coming. You guys realize the world we're in right now? Where the Persian Gulf is the low-risk supplier? Okay, let's talk finance. As you get older, you get more money. Your income increases, you get raises as you age, you get more experience, you demand higher payback. And then you turn 65 and it just stops. That last decade before you retire is your peak net worth, peak income, peak savings. Now, normally, this wouldn't matter. This is a pre-industrial demographic structure. Children at the bottom, retirees at the top, everybody else stacked up. Normally, it's a pure pyramid because of mortality, which means that when you turn 65, you're a small sliver of the population, and you're replaced by a larger sliver, and so on down the pyramid. So if a small group retires and they take their money with them and they cash out of stocks and bonds and go into stocks and bonds and go into T-bills and cash, it's not a big deal because we always know what the proportion is going to be. It's the same almost every year. It's small, it's minor, it doesn't matter. Largest generation we have ever had. The problem with the boomers, well, one of the problems with the boomers, is that they're retiring. They have dominated our financial and our workforce for decades. When they entered the market back in the 1960s, they supersaturated, they kept labor costs low until now. On average, the American boomer retires in the fourth quarter of this year. We know they're liquidating their investments because they've been doing it for a couple of years already. We hit the tipping point in the fourth quarter. We know that between the first quarter of last year and the last quarter of next year, that the cost of capital has to go up by at least a factor of 4 simply from them removing their money from the markets. That was always unavoidable. We've known this is coming since the 60s. We're finally here. Are you ready? No one is. Gen X, this is my generation. Until recently, we were the smallest generation. Now, when we look at the boomers, I think the thing about the boomers that disgusts us the most is how they treat their families. Because remember, when the boomers entered the market in the 60s and 70s, 80s, there were so many of them, they pushed down the cost of capital. And that forced a lot of boomers to make the second spouse enter the market as well, to make ends meet. But that supersaturated even more and pushed down the cost of labor even more. That's the primary reason why the boomers have had the highest divorce rate in American history, that financial pressure on the family unit. Xers look at this and say, not us. For us, our time is at least as important as our money. And we have a much higher proportion of single income earning families, and which means that we have a far lower divorce rate because of it. Now, that hasn't worked for us very well until recently, because we had 1 billion boomers out there and 1.4 Xers. So we were the perennial intern generation. We had the slowest recompense generation of any American generation, because we're competing with this massive swath, and we were the low man on the totem pole. But now the boomers are all retiring. Even if all Gen Xers wanted to work, and we do not, there are not enough of us to fill all those shoes, which means that we have gone from the lowest raises ever to the highest in just the last 3 years. And it's going to last for at least another decade. It's going to get better every year. Gen Xers, your time has come. And the rest of you can suck it. Zoomers. These are my generation's kids. They are not millennials. No. Now, millennials accurately are believed to be good at managerial skills, good at people skills. They're collaborative, they're social, they're cooperative. These are all very positive traits that is absolutely backed up in the data. That is not Zoomers. The millennials were raised by the boomers to be told they were special, and we don't keep track of the score at the soccer game. You can be whatever you want, you can live in the basement as long as you want. No, Gen X did not raise our kids that way. You can't trust anyone. You have to be better. Not better than the millennials, better than everyone. You can rely on no one. They're overachievers. But they're also antisocial because they're like, you turn 18, you're out of my house. We're gonna keep track of the score of the soccer game. We're gonna put it in a little book. We're gonna read it to you at night. They're pathologically neurotic. They're the most medicated generation we've ever had. They have the highest suicide rate we've ever had. They're antisocial. People talk about the millennials being damaged by COVID because they couldn't be social. For the Zoomers, it was the best 2 years of their life. No one expected them to leave their room. They loved it. Now, if you want to hire coders who can work remote, this is brilliant. You got a generation to choose from. If you want them to actually show up and speak with you or work in a group, oh my God, no. So not only are they the smallest generation we've ever had, they are the most focused on a very specific niche in the economy for their labor force. So whatever labor problems you think you're having, if it requires them being outside or in an office, you aren't gonna find many Zoomers at all for the next 20 years. Now, of course, then there's the millennials. Now, we've talked about some of the positive traits. Let's talk about some of the negative, just to be fair. Lazy, entitled, show up to work at 11:30 on Tuesdays. It's all true. That's also backed up in the data. Totally true. For half of them. The other half have always done everything we expected, wrong word, demanded. They graduated from college a semester early. They didn't go to Europe for 11 years to find themselves. They went straight into the workforce. And because of it, they got screwed. When the financial crisis hit in 2008, they were the last people in, and so they were the first people kicked out. Whether it's because they did everything right or everything wrong, the average millennial lost 3 to 5 years of work experience in their 20s. They will never get that back. They will always be behind. They are the least skilled generation for their age that we have ever had. Now, there's a lot of them, and that's great. But because of that skill deficit, we now have 4 layers to our labor shortage. The boomers are gone. The Xers are insufficient in numbers, even if they wanted to fully participate. The millennials are low-skilled for their class, and the Zoomers have boxed themselves in. If there is hope for getting back to where we were in 2019, it still lies with millennials, but not directly. It lies with their kids. A large generation generates a large generation. We have to wait, all we have to do is wait, for the millennials' kids to be born, to grow up, to go to school and enter the workforce, which means the environment that we're in right now, where we have a shortage of 400,000 workers, is going to increase each and every year until 2032, where it will peak at 900,000, and the millennials' kids will finally enter the market in 2045. That's all we have to do is wait till 2045, or we can suck it up and find a way to deal with it, because this is our normal for a good long time, and it's so much worse everywhere else. Here are the big 4 economies. Let's start with the bottom, the Japanese and the Germans. Specifically the Germans. The German industrial system was going to collapse this decade regardless because their workforce is dying out. The energy crisis simply brings the date forward to the next couple of years. Japan, world's oldest country but aging less slowly, figured out 30 years that they need to automate and to offshore. So the Japanese economy today is about the same size that it was back in 1997. It'll probably be able to hold, but you shouldn't expect miracles. Then we got China. Now you see right here are the American millennials. You see that China kind of has that one spike that looks promising. Remember, their population is roughly 4 times the size of ours, so that one spike really matters, if it exists. The Chinese have been updating their data in the last couple of years. They still haven't released their 2020 census because they couldn't believe what came back. They're now starting to believe it. And they now think that they overcounted their population by in excess of 100 million people, all of whom were born since the one-child policy was adopted 40 years ago, suggesting that those yellow bars don't exist at all. If this is true, China is the fastest aging society in human history. That means from a demographic point of view, the Chinese economic model cannot survive the decade. And it strongly suggests that as soon as 2050, the Chinese may have lost 600 million people. I don't worry about China at all. The after effects of China's collapse, that I'm concerned about a little bit. Because it means that the workshop of the world and all its productive capacity could just... So China, Germany, the two greatest manufacturing economies in the world, are basically going away at the same time. Now, this is a primarily Texan crowd. You're all thinking, oh, well, but what about Mexico? Mexico's great, and Texas has a 30-year head start on everyone else in interacting with Mexico in a cooperative manner. The problem is that northern Mexico, the part that Texans think about, that's only 35 million people. About 2/3 of that labor is already spoken for. So if you're not getting your stuff from Mexico already, like chop chop, you're running out of time. Because you also have to do it in an environment of higher capital costs. All right, here's Mexico. Love it, love it, love it. It's not for everyone. Check this out. Mexico started industrializing in the 90s. Their population structure changed immediately. Now, this is not yet a problem. This is what happened in Germany in the 40s. So, they still have decades before this is really an issue. But it does mean that there is a light at the end of the tunnel, and it is a train. So get to it. Okay, labor costs. Here are Southeast Asian countries, which I'm broadly positive on. Decent geography, good demographies.
To Zeihan, knock your socks off about China and the Ukraine war, click this video. Everything you think you know about these topics will be challenged, and he has a lot of evidence to back it up. It could totally change how you choose to invest over the next 2 years.